So what we got here, Becky, is this Kensho StatsBox analysis. Our data partners over there, remember NBC Universal has a minority interest in Kensho. They looked at all the data for Apple's blowout earnings reports. Now, what we looked at were the times over the past 20 years where Apple has beat consensus earnings per share estimates by at least 25 cents. So a pretty decent beat for Apple earnings per share. It's only happened 3 times in the last 20 years, excluding what happened yesterday. So we just looked at those 3 samples here. Apple stock has been positive the day after every single time. So if you had bought Apple shares at yesterday's close going into the number and you got this kind of a report, those shares rose. And it also rose 5 trading days later as well. So some pretty decent moves for Apple. If you were an Apple bull, this might be the time to at least say, hey, the history that we have for the last 20 years shows us Apple does well after a really big earnings beat. Now, if you take a look at some of the other blowout numbers, of course, the $178 billion in cash, that's a huge number for a lot. We know that it has a lot of cash, but just to put it in perspective again, the $178 billion that Apple has in cash and short-term investments, that's bigger than the market values of AT&T, which is worth $170 billion right now. Also, Bank of America at $164 and Disney at $159. So Apple's cash hoard can buy each one of these companies, a huge move. And then, of course, you spoke about what's happening with Yahoo. Just to put it in perspective, 384 million Alibaba shares. That's what they have. And like you said, current market value of around $40 billion. Yahoo's market value entering yesterday, or at yesterday's close, was $46 billion. So again, a lot of value of Yahoo, we know this, has been placed just in that Alibaba stake. And today we'll find out how much more they want to put in that business, the value of the business overall without this Alibaba stake. Becky, back over to you guys.